In this video, I'm going to demonstrate a way to trade one market by taking signals from another different market. And in one case, if you actually trade both the markets using the same strategy on both markets, it can increase the net profit and reduce drawdown than if you traded just one or the other. I'm going to use a simple daily bar strategy which takes the signals from euro dollar but then executes the trades on US dollar, Swiss franc, or US dollar, Canadian dollar. It works because both US dollar, Swiss franc and the Canadian dollar are quite inversely correlated to euro dollar, meaning that they move in opposite directions to one another. And while I say we're taking signals from euro dollar, what we're actually doing is we're going to take the opposite signal. So if we see a buy setup on euro dollar, then that's our signal to go short on either the Swiss franc or the Canadian dollar. I'll quickly show you the setup on my whiteboard and then we'll go and have a look at how it works and look at the results of the backtest on the computer. I'd normally take you over to the main whiteboard today, but I've got a few webinars coming up and I thought I'd better work out how to use this online whiteboard software. So I've been playing around, made a few drawings of some charts, and today that's what we're going to be looking at. So first of all, let's just look at this top chart here. This is the euro dollar daily chart. Ignore the bottom chart for now. We were looking for the setup. Now the setup is dead simple. The first thing we want to see is the close of the daily bar less than yesterday's low. So this is the close we're looking at here, and it's less than yesterday's low. So that's the first part. The next part is the close is the lowest close over the last 8 bars. So we look at the closing price here, then we look back over the previous 8 bars and make sure that this close is the lowest close, and we can clearly see from the closes that it is the lowest close. So that's our setup. Now, if we were going to go long on euro dollar, then the next day, let's just draw this in, if prices rallied above this high here of this setup bar, so we would get in here. So the minute we saw this setup bar and these conditions here were true, we'd set a buy stop order at the high of this bar. So about here would be our trigger to enter, and we'd get in the market around here the next day and prices would hopefully continue on up. However, if we're going to look at the setup on euro dollar but we're going to execute the trades on USD, Swiss franc or USD Canadian dollar, then we're not going to do that. What we're actually going to do, let's just get rid of that I've drawn, is the minute we see this setup bar on euro dollar, we then move to the next chart, whether it be Swiss franc or Canadian dollar, and we're going to see a bar something like this. And remember, I said if we see this buy setup on euro dollar, then we're looking for a short setup on the other 2 markets. And on the same day that we see this buy setup, what we do is we place a sell short order at the low of this daily bar. It doesn't matter what this daily bar looks like because we're taking the setup from the euro dollar bar. As long as the euro dollar bar looks right, we just place a sell short order at the low of that daily bar, where this red line is here. And the next day, if prices then start to decline and they move through that low, then we get in our short trade. Prices might not come down. Most of the time they're going to continue on up and never stop us into the trade. But if they do, that's when we get into the trade. And of course the opposites are true. When we see on euro dollar, when we see a short sell setup, then we're looking to place buy stop orders at the high of the bar on either Swiss franc or Canadian dollar. And as soon as we're in the trade, we're going to use a stop loss of 300 pips and a profit target of 1.5 times that at 450 pips. And I'm going to show you the results on the euro dollar strategy using the basic strategy. So when we see a buy setup, we are going to take buy trades. Then I'm going to show you the results for Swiss franc and Canadian dollar using the opposite trades. So when we see the buy setup on euro dollar, we go short on Swiss franc and Canadian dollar. So all 3 markets are going to use the exact same settings here. The lowest close over the last 8 bars, 300 pip stop loss and a 450 pip profit target. And the results for the tests you're going to see are over the past 10 years. The test starts at the 1st of January 2012 right the way through to January 2022. I did try the tests a couple of years earlier than 2012. Only the euro-dollar strategy worked particularly well. The other two didn't actually work that well, but they have been working for the last 10 years. So let's have a look at the results. In this first chart, we're going to look at the results for US dollar, Swiss franc. And in this lower pane here, I've got euro dollar, because the way I've programmed this, we're using this lower pane for the signals, but then we're executing the trades on this upper pane, which is the Swiss franc. So on this day here, this is our setup bar. The close was lower than yesterday's low, and the close was the lowest close over the past 8 bars. So we've seen the setup. That's our setup to go long, or actually our setup to go short on Swiss franc. So the minute we've seen that, we look at the daily bar on the Swiss franc and we place a sell short stop order at the low of this bar. And you can see the next day, markets opened here, they went down and they stopped us into the trade. So we're in the trade. If we were using the strategy just on the Swiss franc and disregarding euro dollar whatsoever, then this could have actually been a short setup anyway. I'm just looking at this close here. Yes, it probably was the highest close over the last 8 bars, and the close was higher than yesterday's high. So that was actually a setup in itself anyway. We would have taken that trade, but that's just a fluke. They're not all like that. We tend to get more reliable setups taking trades from the euro-dollar chart. So let's have a look at the performance report. That's the equity curve from 2012 through to January 2022, and the results look quite stable, don't they? Making 40,000 francs, and I have actually included some costs in all of these tests. I've included $60 or 60 francs, which is equivalent to 6 pips worth of costs in all of these tests. Is the long trades only, short trades only, and we've got just over 100 trades, quite a large average trade at 400 francs, and largest losing trade. There was a tiny bit of slippage there, but that was just over our 300 pip stop loss. Next, let's have a look at the Canadian dollar. So exactly the same thing here. I've just hidden the chart which shows the euro dollar. If we have a look, I'll show you. I have actually got the euro dollar on the chart, but I've just got it hidden at the moment. So let's have a look at the results. Slightly more trades, decent average trade still at $300. Stop loss was our largest losing trade, making $39,000. And there's the equity curve. Equity curve isn't quite as nice as it works on dollar Swiss franc, is it? There's the long only. Long only is not bad at all. The short equity curve, that's probably where it falls down, doesn't it? As a big drawdown through that earlier central part, but has been working very nicely since 2016. So the next thing I want to show you is the standard strategy on euro dollar, and then we're going to compare the performance report to that of taking the trades on Swiss franc, and then I'm going to show you how trading both of them can actually complement each other and end up with more net profit and a reduced drawdown from just trading one or the other. But first of all, if you like this type of mechanical strategy, then at the moment you can download my 22-page PDF. It's a Beat the Market strategy guidebook. And I've included 3 more simple rule-based strategies that I think you're going to really like. And at the moment, if you find the link down in the description of this video, you can get it for absolutely free right now. So hopefully I'll remember to leave that link. So the last chart we're going to look at is the euro dollar and taking trades from euro dollar. That's what the equity curve looks like. Quite nice. Makes more money than the other two. 59,000, almost 60. Is the short curve, the long curve. Total trade analysis, less trades, larger average trade, and largest losing trade is around about our stop loss. Now I'm just going to show you the annual period analysis of both of the strategies. So here's the annual period analysis for just the euro dollar strategy. Let's just look at the profit. So we've got from 2012 to 2021 and you can see we've got 3 losing years. Now I'm going to compare that to the strategy on the Swiss franc. Let's see if I can move these so we can see them both. So on the left here is the Swiss franc, and on the right here is the euro dollar. And notice that 2012 euro dollar, we had a losing year, very, very small losing year, but we had a profitable year in the Swiss franc. The next losing year was in 2016 on euro dollar. 2016 we had quite a decent winning year on Swiss franc. 2017 wasn't very good for the Swiss franc, but 2017 for euro dollar was good. 2019 had a very small losing year on Swiss franc. 2019 we had a winning year on euro dollar. 2020 wasn't very good for euro dollar, but 2020 on Swiss franc was pretty good, although the losses on euro dollar were larger than what we gained on the Swiss franc, but better combining the strategies nonetheless. 2021 we had a small losing year on Swiss franc, but a very large winning year on euro dollar. So you can see how these strategies might complement each other if taking the signals and the trades on both of these markets at the same time. So that's one way to use the price behaviour of one market to time entries into another market. I find these price correlation type strategies really interesting and quite effective. They're not very popular, especially in the retail trading space, so it can be a great way to gain another edge in the market. What do you think? Do you also use these type of price correlation or intermarket strategies? Let me know in the comments down below. I hope you found the video useful, and if you've liked it, please give it a thumbs up. Anyway, until next week, this is Gerald Goodwin, and thank you.